Hello all. So today we are going to have a clarity regarding uh, funds flow and a cash flow. So 1 second, we'll be beginning with. So hope you can see this one. So the question goes on like this. The following are the summaries of balance sheet of Vijay Lakshmi Limited as at 31st December 2015 and 16. So he gave us share capital, general reserve, profit and loss, bank loan. Very specifically, he mentioned short term. So we are going to take it as a current. Creditors, then provision for taxation he gave us. Then land and building, land on the asset side. So these two will be the fixed. Stock, debtors, cash and bank will be our current. So these cash and bank, I'm going to treat it as a current when it is a case of funds flow statement. Fine. Now let's get into the additional information. He gave us depreciation was written off plant at 28,000 in 2016 and dividend 40,000 was paid during the year he gave. So whenever he gave a dividend, we'll see on the liability side, did he give us anything like dividends, proposed dividend or anything? He didn't mention. So simply, I'm going to treat these two transaction into two effects. Then income tax provision was being given to us of 50,000 made, he said. So I have already explained earlier, a made and a paid, they make a lot of difference. And a piece of land has been sold during the year at a cost, is it? So now, taking these additional information, I'm going to go for taking into considerations based upon this additional information. I have to go for preparing my adjustments accounts, means my working parts. So here, how many adjustments were there? Four are there. So first was related to depreciation on a plant, means I'll go for plant account. Why I have to go for creating a plant account? Very simple, mom. When you have a two figures, opening is 3 lakhs and the closing is 3 lakhs 48,000. And then he gave in the adjustment a third figure. So when you have got a three figures, then there is a chances the fourth will be your outcome. So to know about a fourth one, we will just go for preparing the account. Likewise, dividend. So dividend, I got one figure. I'll see, do I have any other two accounts or other two amounts? So when I'm seeing it, I don't find anything like that. So that's why I'll simply don't go for not creating any account. Whereas income tax provision, this is the 50,000 is a one figure and I have 60 and 70 in the state. So I have to go for creating account because I got three figures. So I find out a fourth one. And a piece of land has been sold, he said. So a land account I'm going to prepare again. So totally from this statement, I'll prepare three different accounts. So shall we now? So now we are going to begin with this one. So here, let me go with, hope you have got to have a clarity regarding the sum. So total, how many I said? Three accounts we are going to prepare. One is the land and building I'm going to prepare, plant account I'm going to prepare, and a provision for taxation account I'm going to prepare. So first I'll go with that accounts. So here, Here we are going to go with one more account. So these are the three accounts, adjustments account, which I'm going to prepare it now. So here, sorry for the need because of these new features. I'm not so used with this. Fine. So now I'm going to go for preparing this one. So first one, he gave adjustments regarding Watma. I told you it is about a depreciation on a plant, he said. So now I'll go for preparing a plant account. So this will be my first account will be in plant account. Then the second one I'm going to go for preparing about adjustment he gave income tax provision made during the year. So that I'm going to go for preparing that one. Income tax made provision for year. So my next account will be income tax, provision for income tax. Next one we are going to prepare is land and building account. Land and building account. Okay, so these are my particulars. Um, yes. So now here, whenever first we are going to complete with our plant account, and especially I have already explained you very clearly, whenever it is asset account, my opening balance always will be on which side? On the debit side. So here, to balance brought down, we are going to take the amount is given for the plant is 3 lakhs. Increase the balance. So 3 lakhs. And here closing he has given us is 5 balance carried down. Given is 3 lakhs 48,000. And now when it comes to the plant, I go with the same. The opening balance should be always on the debit side. So, balance brought down is on the debit side. So here it is 4 lakhs and my closing will be balance carried down is equal to 3 lakhs 80,000. So this is what he has been giving us. So first we have gone with the plant and the land and buildings, which are both are assets. So opening balances will be on which side? The opening balance will be on the debit side. Now, when I go with my provision for the taxation, that is my liability item. So my balance of opening will be on the credit side. So balance brought down, he gave provision for taxation is 60,000. And whereas the closing he gave is 70,000. So that is what we are going to write. By balance carried down is equal to 70,000. So this is done. Now, once we have taken our opening and closing balances, now we'll see what is the adjustment is actually talking about. So when I go with the adjustments, first one, when it is of plant, he gave a depreciation of 28,000 in 2016. So depreciations are supposed to be written on this side. So here I'm going to write by depreciation will write, or else we are going to write as by P&L within brackets as depreciation, and the amount he gave is 28,000. Now I have to go for finding out how much it will be. So 28,000 and 48, so 3 lakhs 48,000 less 28,000. When I add, I'm going to get 3 lakhs 76 as a total. So 3 lakhs 76 as total minus opening. If I minus 3 lakhs, then the balance 76,000 I will get on this side. So what I have to write here? So here I'm getting a balance of 76,000. Now this one I'm going to write as whenever the balancing figure is on debit side, then you are supposed to write as to as if we have purchased the new asset. So that is what we are going to write here as balancing figure. We will write as what? Balancing figure. So this is our account which has been completed. So this one we have done. First one we have completed of the plant account. Now we'll get into the next asset. Before going to the provision for taxation, I'll go with the asset account. Okay, fine. So here, my asset account, yeah, land and building, I'm here. So when I'm going to the land and buildings, I'll see what is the adjustment he gave. Opening and closings, we have already completed. Now I'll see what is the adjustments. Here, he didn't give any adjustment amount actually, but he just said a piece of land has been sold during the year at a cost. So if he didn't mention the amount, but I can see there is a difference between opening and closing. I had actually a value of land is 4 lakhs, but it has reduced. So usually whenever the balancing figure is coming on the credit side, I said for this one, if it is on reducing on this side, then you will be taking it as a purchase. It's a default. But the same is going to be repeated here. We have to assume it as a closing and a sales means it's not like that. Whenever asset side, if the balancing figure is coming on the credit side, first option is always given as a depreciation. If he mentions anything, then I have to assume that particular thing. So first, when the value is reducing of with how much value? The value is reducing with the 20,000. Then what I have to assume first? I should assume it is to be an actually a depreciation. But he mentioned very clearly that we have actually sold it. So when he clearly mentioned it, then I have to write it. We have closed or we have assumed it is to be a sale. So that's why I'm going to take it as buy and within a bracket, I'm going to write sale. So this will be my balancing figure. Okay, so we got this one as one thing value, and we got another one as one more value. So one is purchases we got, the other one we got is sales. Now we will get into the provision for taxation, which is the last adjustment for us. So provision for taxation, what he has mentioned, he said the income tax provision was made during the year was 50,000. So made means it is a due amount. We didn't paid it. So it is a due amount. So when it is a due amount, we will take this due amount on this side. So as I, P and L, and just for your convenience, I'm making it. So it is a due amount. So how much is it? 50,000. Now I need to close it now. So 50 plus 60 is equal to 1 lakh. 10, you're going to get it. So these 1 lakh 10,000 minus, if I do 70, then I'm going to get a difference of 40,000. And which side I'm going to get a difference of 40,000? I'm going to get the difference on the debit side. So what I should assume is, I'm going to assume that's 2 and 8. And how much is the amount I'm getting? 40,000. So remember, whenever you're going to have this provision for taxation or a dividend, there are only two options. If he says made, then you will transfer it to PNL. And when he says it is paid, you're going to transfer it to the bank. So if he is giving a made, you will post it on a credit side and the balancing figure you will write as a bank. Now, if he is giving as a paid, then you will write to bank on the debit side and the balancing figure you are going to write it as this one, by PNL. So apart from these two, you will not have any other thing. So hope it is clear now. So now we will start with the actual procedure. So once we prepared our accounts, now it has to be started with the preparation. So now I'm going to go with the funds flow statement, and my funds flow statement begins with preparation of changes in working capital. So changes in working capital. So how it is going to be? We are going to have a block wise. This one. Now, total we are going to have a 4 amount columns. So based upon that, I'm going to go for recording it. Then this is the third. Then so here, whenever I'm going with my working capital, whenever I say I will use the word of working capital, it means that working capital itself means the current assets with the current liability. So whatever my account preparation I'm going to have, it is going to be a combination of what? It's a current assets with a current liability. So this statement we are going to call it as changes in capital statement. Okay, fine. So this is our statement. Now, here I'm going to have as it is again. Particulars. So this will be previous year, 2015. This will be 2016. And this one I'm going to write it as increase. Mhm. Working capital. And second one is release. Mhm. Working capital. So this is how I'm going to take into consideration. So once we have done, so on the top, we are going to have what? The first, I said it is with the current assets and minus current liabilities. So first I'm going to take my current assets. So what are the current assets we have taken? So in the sum, we have got current assets. The first item was land and building, plant and machinery is completed. So we have the other current assets are stock, debtors, cash, and the bank. So I'm going to take all these things. So first is stock. So a stock amount for the 2015 is 2 lakhs. And for 2016, it is 1 lakh 41,000. Then I go with the other one, wherein debtors. Debtors. So for 2015, it is 1,60,000. And for the next year, it is 1,28,000. And after debtors, we have got cash. For the first year, the cash shows me around 1,000. And for the second year, it is 1,200. And the last one we have got current asset is bank, which for the first year, it is showing me a nil. Whereas for the second, it is showing me a 16,000. So these are done. So these are the current assets we have got. So from once we have got the current assets, now I need to go for totaling it. So when I go for totaling it, so once we are going to go for totaling it and we'll find out what is the total of the assets value. So here on the side of first for 2015, the value of this one is total is equal to 2 lakhs plus 1 lakh 60,000 plus 1,000 is equal to 3 lakh 61,000, right? 3 lakh 61,000. Whereas for the other one, for the next year, it is 1 lakh 48,000 plus 1 lakh 28,000 plus 1,200 plus 16,000. Total is equal to 2 lakhs 93,200. So this is my total of assets value. I have done it. Now, once we have completed with this one, the next one I'm going to take is the current Current assets I have taken it. Now current liabilities I'm going to take it. So I'm just checking out, do I can go for any kind of highlighting point. Yeah, current assets I have highlighted. Now I'll take with my current liabilities. These are my current liabilities. And then under this one, what are the things I have got it? So first one we have got is bank loan and creditors, because provision for taxation already I have taken it for preparing an account. So once we prepare it, we are not supposed to go for taking them as a current asset. So that is the reason now I can't take the current assets. So current liability is provision for taxation. So I'm just excluding that one. And I'm going only with my creditors as current liability and as well as my bank loan as a current liability. So first year it was 3 lakhs, second year it is 2,70,000. And after this one, I'll go with my bank loan. So bank loans, very specifically, usually bank loan means I'll assume it needs to be as long term, but here he very specifically mentioned me as a short term. So when he mentioned very clearly, then I'm supposed to go for taking it as a short term itself. So now I have got only two accounts, so I have to total these one also. So when I'm totaling it, one is going to be how much ma? It is going to be 1,40,000, and the other one it is going to be 2,70,000. So first one, 1,40,000 plus this one, 4,40,000. And the second one is equal to just 2,70,000. Okay, done. So now this part is done. Whatever we are supposed to do it, I'm done with this particular part. Now I have to get it for knowing about. The actual process begins. Why we are finding out. So what we are mainly for finding out for, we just want to know what is the working capital. And working capital, basically the formula is equal to current assets minus current liabilities. So that is the reason now I need to minus these two things, current assets with my current liabilities. So total of 3,60,000 minus 4,40,000. How much it is going to be? So that one I'm going to take it off. So here, how much I'm going to get it then? So this one here I'm going to write it as working capital is equal to current asset minus current liability. So therefore, it is equal to how much, ma? Now, just observe here, my current assets are less than my current liabilities. So I will get the things in a minus figure. So how much I'm getting it? I'm getting it as minus 79. I'm getting it minus 79. So usually whenever it is minus figure, I have a habit of putting into the bracket. So that is what I'm doing it now. I'm making into the bracket. So this is the minus figure I want. Now I'll go with the next side. The next side is how much? 2,93,200 minus 2,70,000, which is equal to 23,200. I got this figure. So once we are done with this one, now the next procedure I have to take. So what is the next procedure is I need to find out whether my working capital is increasing or my working capital is decreasing. So how we are going to find out? Remember, ma, always the current assets are going to have a direct relation with the working capital. Means if the current assets are increasing, the working capital also increases. Remember, when the current assets are increasing, the working capital also increases. So that is what we are going to do. So here you just see. So that means if the working capital is current assets are decreasing, then working capital default will decrease. So that is what you can see. Previously, stock was 2 lakhs and now 1,48,000. So it is decreasing. So when it is decreasing, I should post the amount column into which side? On the decreasing part. So that's why now I'm going to take it on a decreasing part. How much? 52,000 I'm going to get it. Then when I go with my debtors, even debtors are also last time 1,60,000 and now it is 1,28,000. So it is also decreasing. So when it is decreasing, the decreasing value again I'll post on the decreasing in working capital only. But when I see my cash is quite opposite to that one. My cash is not decreasing, rather it is increasing. So when it is increasing, then I'm going to take the amount column of the increasing side. So how much it is now? 200. It is increasing by 200. And whereas my bank account is also, actually there is no value in the first column, but there is a second value. Means obviously we'll assume it is increasing. So that's why the increased value of 16,000, I'm going to show it on an increase in working capital. So is this clear? My current assets are going to have a direct relation with my working capital. So current asset increases, my working capital also will increase, and it's a vice versa with the same condition. Now, if it is clear, let's go with the other thing. What is the other thing? It is coming down to the liability. So please be very clear. My current assets are going to have a direct relation. So obviously, the relation with the liabilities will be quite opposite, isn't it? So that's why when I go with my current creditors, my creditors compared to the last year, it is actually decreasing. So when it is decreasing, then I said opposite relation. So I'm going to take on an increasing column. So I'm going to take amount on each side, increasing column by 30,000. Likewise, if you see here, how much I got? 1,40,000 on the first side, and whereas it is decreasing. So when it is decreasing, again, I have to show it in the increasing column only. So how much it is by? Again, for 1,40,000, it is going to be shown in the increase column. So once again, I'm telling current assets will have a direct relation. So if the current asset increases, working capital increases. So that same thing, I'm just following in an opposite relation for the current liabilities. So when the creditors have been decreasing in value, but I'll post the amount into the increasing. Likewise, bank or loan is also decreasing, but I post it into the increasing. So this one you have to see there. Now let's total. Now once we have totaled this one, now I have to total this one also. So what I'll do here, so please total it from this side. So one is 84,000. The other one is how much? Let's check it out. So first one is 1,40,000 plus 30,000 plus 16,000 plus 200. So how much it is now? It is 1,86,200. 1,86,200. Now the other side we have got is how much? 84,000. So 84,000 is the another total. So now what I'm going to do it. So simply once these figures are done, now I have to find out whether it is increasing or decreasing. Now, whichever the total is highest, that total I need to highlight. Now, this is clear that this value is increasing. This total is increasing for me. But how I'm going to judge this one? Now, see here, this is minus figure, whereas this is in a plus figure. So, I'll assume this is the value which is more compared to this one. So, that is the reason I will go for taking out this one away. So, here, when I see here, it is going to be so here, this is a statement we have got it. Now see here, this is the one wherein we got a total. This is very important for us. I'm just taking into things. Can I highlight it? The orange, this one I'll make it. So this one we want. This is the one which we wanted. So this is the one it is required. So whenever but the statements we are going to prepare it, the statements from this one, this portion is just we are been taking or depending upon it so that we can get these to be the answer. Now here, this figure is meant to be what? How I have to highlight? What I should do? What should I am going to address it? Is it increasing or decreasing? So very simple concept you're going to take. Among these totals, which is the biggest total? So this is 1,86,200 is the biggest total. So these we got in which column? Increase in column. So that's why I'm going to address this answer as my increase in working capital. So these will be my answer. So hope it is clear for you. Now, this is one portion we have completed. Now we are going to get into the next portion for us. So the next portion is going to be the preparation of P&L adjustment. So I'll try to adjust here itself because already we have prepared all the things. The only thing is we have to go for preparing in the format of account. So why to go for going to the other page better we complete here itself. So P&L account, how we are going to prepare in a T format, the same format, I'm just applying it and I'm going to prepare it. So leave it. Now, particulars amount, my particulars amount columns. Hmm. So this is my P&L adjustment account. P&L adjustment account. So here as this, it is my particulars amount. Particulars here, it is amount. Again, it is particulars, and here it is again amount. Now, these particulars or whatever the PL account I'm preparing, it is again I'm preparing from my balance sheet. So you all know it, my balance sheet I'm going to take whenever I'm going with any kind of a preparation, I'll see whether it is a part of asset or a liability. So here I'm going with my PNL, which is a part of my liability. So that's why my opening balance will be on which side as my balance carried down. So how much we gave for us? Here I got a general reserve and a PNL. Whenever I have got a PNL, then I will give preference to my PNL account only. If I don't have a my PNL, then I will go for taking my general reserve as my profit. Okay, fine. So first I'll give always preference to my PNL. And here it is to balance carried down. Here I have written as carried down. Here it used to be carried down and there it used to be brought down. Can I correct it now? Yes. It is brought down capital and it is carried down capital. So here, whenever it is my P&L adjustment, I'll go for taking all the P&L activities only. And what all will be there in this one is, we will be taking into considerations the special adjustments, not the regular paid salaries paid and all those things will not take it. Here we are preparing an asset account. So that's why the items which are related to the asset, we will take into account. And that too, they should be related to the P&L, like depreciation, loss or profit on sale of asset on, and then dividends paid, taxation paid, all these things we are going to consider. So first, what I'll do is I'll go to my first page wherein we have gone for preparing what now we have prepared One is plant and machinery provision and the land and building. So from this one, do I get anywhere or else did I write anywhere as P&L? So that things I'm going to take it here. So when I see my plant, here I have taken as a P&L on the credit side. So first effect it has completed its credit means the second effect it should be on the debit side. So that is the reason I'm going with my posting into the debit side. So what I'm going to write here as to, from which account I have taken it? From the plan. To plan depreciation. I have taken how much? 28,000. So my first account, first transaction is completed. Then I'll go for the second. Again, provision for taxation, I have prepared a P&L. So I made a P&L, so it is on the credit side. So again, it will be coming on which side now? Again on the debit side. So that's why my second one, I'm going to take into consideration this side as to taxation. Either I'm going to take it as provision for taxation or just a taxation I'm going to estimate. And the amount we have got is around the 50,000. So that 50,000 I'm going to take it into consideration here. Now my adjustments account, I have completed it, which I have prepared earlier. Now I'll see, do I have anything from the land and buildings? Before getting into final things, I have to check it. Do I have to go with any kind of things which are again in the land and building? But in the land and building, I don't find any kind of a P&L. So that's why I'm going to skip it up. Now I will go to my checking out a sum. So first I'll start with looking into the balance sheet statement. So when I see balance sheet statement, I have got on the liability side, share capital, general reserve, I have got it. So general reserve, whenever it is, when I have a two profits, one profit already I have taken as an opening balance. Now what I'll do with my second profit. So that's why the second profit, it has to be increased. And that increased value, we are going to write it as transfer. So here I'm going to write it as transfer to transfer to the general reserve. So to transfer, I'll make it in a short form, transfer to general reserve. I'm making it in a short format. So the difference amount I've already posted here. So how much is the difference amount? It is 20,000. Last time it is 1 lakh. And the next date is 1 lakh 20. So that is the reason 20,000 it has increased. 20,000 we are transferring to the profit. That is what we'll assume and we'll transfer to the P&L account. Apart from that, do I have any things like discount on debentures or underwriting written offs or goodwill written off? I'm going to check it out. But in the balance sheet, I don't find any such kind of a things which I'm supposed to take it. So whether it is preliminary, whether it is goodwill, I don't find any of these. So that's why from the balance sheet, I'll just move down to the adjustments. So depreciation already I have taken it. Dividend I didn't take it. So now I will go for taking it. Dividend paid. So to dividend. So I'm going to take this one as dividend. So dividend, how much he gave us? 40,000. So 40,000 dividend, I'm going to take it up. So that is done. Then do I have any other adjustments which I'm supposed to take it? So I don't find anything. So simply I can close this one. So when I'm closing it, how much I'm going to get it, that one as my P&L profit, I'll check it into this one. So here, a total of debit item and total of credit item, I'm supposed to go for finding out the total. So here, debit side, I have got how much more? 61,600 plus 60,000, 40 plus 20 plus 50 plus 28,000 minus 61,000 I'm going to do. So how much I got it? It is 1,38,600 I got. Now my debit side total was more compared to my credit side. So my balancing figure I'm getting on the credit side. So here I'm going to write as by funds from Gracious. This is what? How much I got? 1,38,600. So this is the value which I have got. So now again, from my second account, this is the one which figure I needed. So I have got this one also. So simply I'm going to go for totaling it. So you can write the totals as it is, or else you just total, just leave as drawing a two lines. So it's up to your wish. So this is done. Now we'll go with the final statement, that is fund flow statement. So let me go with the new page again. So here I'm going to go for preparing with the last statement, that is funds flow statement. So here my funds flow statement will be my last statement, and this funds flow statement has to get tallied. So when it is tallying, then it is assumed that we have completed our sum to be perfect. So that is what here will assume. The functional statement we are going to have, one is source and application. So here, this part we are going to call it as applications. So source and applications are nothing but whenever any kind of a benefit I'm going to get it, that I'm going to treat it as a source, and anything which is going to go for giving me expenditure, that all I'm going to assume it as an application. So here, the first and foremost thing I'm going to take is, already earlier we have prepared the two accounts. So from the balancing figures from these accounts, I'm going to first consider while preparing my funds flow statement. So first one is from my working capital. I got increase in working capital. So the second one of funds from operations, we got it. So these one, I'm going to take it first. What I have to do. Now remember, whenever it is increase in working capital means it is nothing but it is an expenditure for me, because it is actually taking away my funds. It is actually taking working capital itself. Will assume it is to be what? It is nothing but a expenditure. So when it is increasing, so obviously it is nothing but for you, it is a expenses. So increase in working capital, whatever I have got it, that amount I'm going to treat it is to be my value. So I got 1,02,200. And whereas funds from operations, I have got it. So funds from operations, I'm going to assume it is from the operations, I got a fund. So that's why these funds from operations will be my benefits. So I'm going to take it as a source. 1,38,600 is about. So once whatever we have prepared, it is done. Now I'll get into again with my working capital. So working capital account we have prepared from where? We prepared from the page number 1, wherein here now I'm going to consider every transaction has to go with a to-do effect. So P&L, this one has completed its to effect, this one has completed its to effects. Now I'll go with taking the things which are being highlighted as bank. So these first one, bank purchase I have mentioned. This one bank paid I have mentioned. And here bank I have mentioned it as sales. Now these three things I have to show according to their nature. When I say purchase, my cash is going up. So it is my application. When I say paid, my cash is going out again. So it is again what? It's an application. And when I say it is a sales, it is actually giving me a fund. So it is going to be my benefit. So this is the way I'm going to go for posting the things. So that's why now we have got how many? Two applications and one as a benefit. So we got a sale. So sale of land, which has given me around 20,000. And then I have purchased plan, which has given me surround amount of 76,000. No, this is the, and then again we have paid a taxation. So that also I should take here only, no? So that's why I'm taking a paid, paid for taxation, which is around 40,000 I got it. Now then again, I'll go for the other one wherein we have paid a dividend also. So dividend paid, which is again it's a 40,000. So we got this one. Now I'll go for, do I have any other things which I'm supposed to go for taking into consideration? So we'll go for checking that one. So paid for taxation is completed. Let me check once. Paid for taxation is how much we got. Once from operations, we got paid for taxation is 40, 20 and 76 is a purchase. Yeah, right. Now I'll go for checking out other things. Now, what are the other things which are left over? I will be finalizing that one. So what is that is land we have completed, plant we have completed, stock, data, cash, bank is completed. Now coming down to the liability side, reserve, profit, bank loan, creditors, provisions, everything are done, but share capital we didn't touch here. So share capital is actually increasing. So when it is my liabilities are increasing, I'll assume it is to be a fund is coming. So that's why we'll write as issued share capital, which is a 1 lakh. Now please do go for totaling it. It has to get tallied. So when it is tallying, then our answer is perfect. So 2,58,600 is our answer on both the sides. So means 2,58,600. Same goes here. It's- So these are the two. Okay, done. So this is all about a fund flow statement. So whatever the adjustments I have prepared, now I'm going to go for preparing it for you people. The same sum, the same kind of a question, we will do it in a cash flow statement in the another video. Please go through it.